Thor, the company that makes some of the best motorhomes in America, just released some pretty interesting and albeit aggressive guidance. And so this is a company that I actually think is ultimately going to be an acquisition target for Berkshire Hathaway, as they're already in the industry. And so let's dive into that guidance. So guys, as you smash that like button, let me run that intro. What's up, guys, and welcome back to the channel. Now, Thor Motorhomes has been a favorite in the value investing community for a long time, and as I go through this video, you're going to see exactly why the value investing community really likes this company. And so for you guys who are not really aware of RVs and the motorhomes, now you guys might be thinking of the RV that you see in Breaking Bad. Now, that is a type of RV. However, there's lots of other types. For example, this here is a Class A RV motorhome. It just looks like a tour bus, but that is one of the types of vehicles that Thor provides or produces, and I'll show you guys pictures of other vehicles as well. And before I get into that, I just wanted to point out that I actually made a big bet last year that the share price for Thor would not drop below $64 per a share by January 20 of 2023. And if the cash secured put expired out of the market like it did, I'd make 5 figures on this position, which I inevitably ended up doing. However, in all honesty, I felt like the shares would actually crash because I felt like sales were going down. And so I thought that I'd just be able to buy Thor at a price that I liked. So it was like a fluke that the CSP expired out of the money, which is why I focus on, a good annualized yield. And so with cash secured puts, this happens to be a situation where, it wasn't heads, or I guess it was heads. I won because the cash secured put expired out of the money. But however, tails is kind of what I really wanted. I wanted to purchase the company at a cost basis of $64 per share, but it just never happened. However, I'm going to be looking to see what sort of opportunities this company provides in terms of the share price and the options premium as time goes on this year. And so for some of you guys, you might not be aware, but I'm actually psychotic when it comes to RVs. I've gone to many RV shows, maybe like 15 or 20 RV shows in my life, go figure. And I've actually wrangled along some friends to go with me too. But my favorite type of RVs is this Class A, but this actually is a model that's a different type of Class A. It's sort of like a hybrid between a Class A and a Class C. And then, the traditional RVs that you guys might be thinking about is the Class Cs. They make those as well. They also have, fifth wheels. So this would go into the bed of the truck, as well as travel trailers. I actually do like travel trailers as well, especially, people who have SUVs and they don't want to give up their SUVs, or they don't want to buy like a Ford F-250 or whatever. You might as well purchase a travel trailer. I really, once again, love the Class A's, but they have their positives and their negatives. The problem with a Class A is that if you have engine troubles and you have to take it to a mechanic, well, you've just taken your home to a mechanic. Whereas if you have engine problems with your car, at least with the travel trailer, your car is at the shop, but you still get to hold on to your travel trailer, etc., etc. They all have their pros and their cons. But I think the most important thing is look at how they dominate North America. However, despite their #1 market position in pretty much all of North America, I would say that the best RVs in North America are actually made by a company owned by Berkshire Hathaway by the name of Forest River. Anytime I've walked into a Forest River RV, it just seemed like just a little bit better. They just use better materials, etc. And so it's of no surprise to me that Warren Buffett purchased Forest River. However, if you want to complement that part of your portfolio, this is a company that would very much complement it. How great would it be if Berkshire Hathaway owned Forest River and they owned Thor as well? I don't know if they ever will acquire Thor, but I really believe that if Thor wanted to be acquired by Berkshire Hathaway, they would take them in a heartbeat. And just a little bit on the history of Thor, you can see that they've kind of been just consolidating the industry since the early 2000s. So you can see that, they acquired Damon, which was a good acquisition. They acquired Keystone, which is one of the most popular names in the RV business. Crossroads is a popular name if you're like into RVs, but if you're not really into RVs, you might not know the Crossroads brand. I think one of the most well-known brands is Jayco, and the reason why Jayco is one of the most well-known brands is because this is your entry-level RV. So a lot of people, if they're going to buy Class C RVs, Jayco's the one that they generally end up acquiring. And Jayco has really been stepping up their quality as of late, and so that's really cool. They also acquired Tiffin Motorhomes. These guys produce, your very luxurious Class A type of RVs, and so whenever you see celebrities saying that they're RVing, they're usually taking these things. This particular model probably sells for around $250,000. So, they can get really pricey, whereas the Jayco start at a lot less. And then, of course, they also acquired the Heimer Group, the Erwin-Heimer Group, which entered them into the European market, which they have a number 2 foothold in. Now, the last couple of years have actually been fantastic for the RV industry. They had a fantastic year, which did keep the stock elevated, and they currently have a somewhat optimistic guidance, which continues to keep the stock higher than I would expect it to be. Like, if the stock dropped into the $60 per share area, I would not be surprised in 2023. And so, what this slide is really meant to do is, look, they're showing what their 2025 goals were that they announced in 2019, and then they're showing the results that they achieved as of year end in April 30th of 2022. However, this is where I'm going to pull back a little bit. Although I am a huge believer in Thor, I have to call this out when I see it. And so, this slide, I believe, is meant to demonstrate how they met their 2025 goals that they set out in 2019 ahead of schedule. But it ignores the fact that we were essentially at the cyclical top, and Q1 of 2023 results for them have already started running substantially behind where they were last year, to the point where I believe that in 2025, they may not even hit that $14 billion sales figure. So yeah, they crossed it in 2022, but they might not get there again by 2025. And so my money says that actually they just barely hit the 14 billion in 2025, but they missed their new 2027 guidance by a lot. And so the question you guys might be asking is, what is that 2027 guidance? Well, here it is. So they're projecting net sales of $20 billion. And so I will compare this to the assumptions that they have in their presentation, and then compare it to the industry data to show you why I think that they're going to miss this. And so you guys can let me know if they don't miss it, or if you think that they don't miss it. However, notice that in addition to the $20 billion of net sales, they want their gross margins to increase to 17%, which is very exceptional if they are to get there. And they want their EPS to be $27 per share. Now, with a $27 per share EPS, this is a company, if they hit these goals, this is a company that'd be trading at around $300 to $400 per share. However, the market is not giving them credit for this at all. And here's why. In their assumptions, they're saying that 2027, the North American retail industry is projected to sell between 585 and 630,000 units for the RV industry as a total. And that is the highs that they reached in 2021, and I'll show you that figure in a second. And so, do they reach the same highs that they reached when, capital was easy to get in a higher interest rate environment? I don't know, and I don't think that they do. The other thing that they're trying to assume is that, they maintain market share leadership positions, blah, 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 and they return to a more normalized level of promotions and discounting. I get that. Now, they do want their pricing to offset inflation, and they expect some opportunistic tuck-in acquisitions. However, they have nothing in the pipeline right now, and they told you multiple times that they have nothing in the pipeline. And so, another area that they're going to try to expand in is the service and aftermarket sales. They're going to have to really push in this area, because I don't think that they're going to get it on the top line sale of RVs. And so now let me show you exactly what this represents, is 585 to 630. Now, in a previous video, I told you guys that one of the ways to stay up to date or understand relevant information as it relates to the stocks that you're following is follow industry associations. Well, for the RV industry, they have what's called the RV Industry Association. Go figure with the name. And so here's what the RV Industry Association tells us, that Thor sales assumptions at 580 to the 630 or 585 to 630, that represents this block right here. And so what it really assumes is that sales in 2027 will return to the all-time highs that we saw in 2021. I don't know if we get there, because we have 5 years to get there, and we're in a high interest rate environment. Now, a lot of people are projecting that interest rates will go down, and that's fine, but I don't know, man. It's anybody's guess where this will go. You can see that there was a huge run-up in this segment, in the cheap money environment. But I don't think that we're going to be in a cheap money environment in the future. And so I think you go back to this long-term sales growth trajectory, which means that you're probably not going to get past 600,000 units shipped by 2027. In fact, I think you're probably going to be around that 550 range. Look, you might get close, but I just don't think that you're going to get to that level that they're expecting to get to. However, their better experts on this than I am. I'm just, sitting from afar and watching this, but I want to know what you guys think. Do you think that they can hit the 2021 all-time highs in 5 years, or do you think that they'll miss those expectations? My numbers in the model and the way that I value this company out fall way short of those expectations, and that's totally fine as well. Now, they're saying that the consumer trends support long-term RV industry growth, and effectively what they're going to try to prove to you in this slide is that the pandemic level surge of demand is going to maintain subsequent to this higher interest rate environment continuing forward. And once again, I do say that people are expecting rates to go down a little bit, and so or actually considerably, and so we'll see what happens. But people are expecting those rates to go down because they expect us to enter into a recession. So you think people are going to be buying toys during a recession? I don't know. And so they're seeing a 50% increase in RV related traffic website, and most of that is just me because I'm looking at RVs pretty much every day, and so it's just psychos like myself who are causing this to happen. It's not I don't know. I mean, we'll see. We'll see if this materializes with higher sales. RV utilization remains high. Well, of course it remains high. Most of these people just bought their damn RVs, and so we'll see what happens there. Customer satisfaction, of course. Who's gonna be sad that they're going fishing with their RV? This I don't know. It doesn't make sense to me. And then intentions of stickiness of the RV lifestyle. 67% of current travel trailer owners intend to repurchase a new RV in the next 2 years. I don't know what this tells me. I would really want to know what the statistic is if they gave me a percentage of RV owners that want to continue the lifestyle 5 years out. I think that's really the real metric. And so, although I am biased, I do agree that the RV industry does have sustained secular momentum, especially in the face of the work from home reality and an increased focus on adventure and discovery. I just don't think that the industry is going to grow at the rate that which Thor expects it to grow, and that's totally fine. But next, management is going to try to prove to you that, they've hit their targets in the past, so you should trust them with their targets that they're setting now. So here's that slide. So you can see that they said that in 2012, this was what their sales were. It was 3.1 billion. And so by 2021, their sales were 12.3 billion. So a 16.6% CAGR. And then EPS, the CAGR was 12.2 or 20.2%. And so they absolutely can deliver. And I'm not using the 2022 figures here because I think it's a flash in the pan, and I don't think it gets repeated over the next few years. And so, they did hit 16 billion of net sales in 2022, and that's why I'm not showing that. But so even without 2022's hot revenue numbers, you can see that they still had strong CAGR growth. And so part of that just might be a lower 2012. But the point that they're making, at least here, is that they've shown that they've been able to grow over the long term. However, notice the measurement period there. 2012 was just when the surge from the banking meltdown started to sort of rectify, and so you started getting this surge of RV sales, but it was a artificial low in the RV sales still in 2012. And if we go back into the industry data, you can see that right here, what I'm trying to say. So look, 2012 was a low year relative to where they were previously. So the last time that they were at 2012 levels was 2002. And of course, that they went down because of the housing crisis. And so, if you really want to measure the growth, if you purchase the stock in 2006, you didn't get that CAGR level. Of course, you'd probably buy more as the stock went down, whatever. But like the point that I'm making is that it's a cyclical business. And once again, I think, blue skies expectations are probably not going to be achieved. I think you're probably going to enter into one of these again as the economy delevers a little bit, as the interest rates remain higher, as inflation stays higher for longer. Now, who knows if that actually happens? I might be wrong, but I'd rather be conservative than optimistic as they are being. Now, one thing that I really love about the company is that not only has management delivered fantastic top-line growth, they've done it while maintaining exceptional levels of profitability. This is why I believe that it's an easy Berkshire Hathaway tuck-in acquisition if Thor ever wanted to be acquired. I really love that 18% return on invested capital. I just love whenever a company focuses on return on invested capital, because effectively what they're telling you is that they do not invest a single dollar into the business without making sure that it's generating the right return. And if that capital is excess, they're going to pay it out. And of course, you've seen them do it. They buy back a ton of shares and they pay out dividends. And here's the company showing you just that in this slide. So you can see they have a 10-year CAGR growth in their dividends of approximately 11.8%. And, you know, they have 12 consecutive years of dividend hikes. I think that record is going to get broken, to be honest. But, you know, I might just be a hater. And then, of course, you know, with the share repurchases, 14% of the current market capitalization is authorized right now to be repurchased through 2025. They're planning to return over almost $1 billion of capital over the next 3 years. And so, you know, it's a very exciting opportunity because they handle your capital so well. So once again, just another reason why I just think that this is a perfect stock for Berkshire to buy, especially on the cheap if the share prices go much lower than they currently are, which I do believe can happen. Now, here's the part that most industry people were expecting. Look, the net sales for the first quarter are down 21.5%. So the Q1 results of their fiscal 2023 has shown that it's a slowing environment. And notice that this was reported in December of 2022. And so, you know, as we go into their second quarter of 2023, I think the environment gets worse, not better. And so I think they're going to continue to show declining sales. And so you can see here that the company announced their full year fiscal 2023 net sales and diluted EPS guidance, with their net sales being a 26% decline from fiscal year 2022 at the midpoint. So that's a huge drop off in sales. And the other thing that I want you to pay attention to is this diluted earnings per share. So it's in the range of $7.40 to $8.70. And so I want you to keep that number in mind. Now, this is a slide from their Investor Day presentation. And what they were trying to prove here was that the market was actually concerned last year about a downturn in fiscal year 2023, which has now materialized. However, this slide was built before that happened. And so what they wanted to do was show you that they would be profitable even during a downside scenario. And they're not wrong. They will be profitable. However, the point that I want to make is that their downside scenario assumes net sales of $10.7 billion and EPS of $6.7 per share. And so the point that I'm making is that they are awfully close to that downside scenario based on their full year guidance that they provided. And the reason why they're able to get here is that they have certain levers that they can pull during a downturn. So obviously reduce their production rates, consolidate production plants, reduce headcount, freeze CapEx, reduce variable compensation, which is an automatic lever. So this is bonus. Now, the other thing is they have a downturn playbook, which is, you know, more headcount reductions, etc. And so, you know, I think that they're going to have to start leveraging some of these levers in order to maintain profitability in 2023. And so you'll probably see some of this announced if it already hasn't by the time that this video comes out. So you know that they have a plan of attack to address the downturn. And guys, you'd be happy to know that they have handled it previously as well. This is not their first rodeo. But what I want to know is, what are their assumptions, or what are their what makes up the forecast that they provided for fiscal year 2023. And so let's get into that next. So you can see here are their key assumptions. So, you know, recall that they're trying to get to 20 billion by 2027. However, in 2023, look how low the net sales are. That's why I think that they missed that $20 billion revenue forecast. Now, their gross profit margins in 2023 are expected to be 14.5%. But recall, guys, and I might not have told you this until now, their medium-term gross profit margin target is expected to be 17%. So they're way off of that gross profit margin that they're trying to achieve by 2027. So once again, I don't know if they miss on this one, but I think they definitely miss on the top line. Now, the other thing is, this they just snuck in here. The tax rate is actually at its all-time high, or one of their all-time highs. And so if you forecast the tax using the rate that they had last year, you're going to be forecasting a little bit too much income for the company. So always focus, if you take anything away from this video, it's pay attention to the tax rate guidance that they provide you, because you might be missing something and overvaluing the company as a result. Now, $7.40 to $8.70. When I built out my model, I have them falling right at the bottom of this guided EPS figure. So I have them pretty much coming in here. And so recall that they're targeting $27 a share by 2027. So if they're going to hit 7.5, look at how much they have to increase by 2027. This is why I just believe that they're not going to do it. And the main reason why they're not going to do it is because of this high sales mark that they're trying to achieve. However, does that mean that this company is not worth purchasing? Well, here's the thing, you know, at $100 per share price, if by 2027, you know, they're hitting, you know, $12, $15 per share, it's a pretty sizable equity yield, anywhere between, you know, 12 and 15% based on the current share price. And so I'll take a 12 to 15% equity yield any day of the week. And that is half of the EPS that they're targeting. And so that's really what the price is reflecting here. And so this is the model that I make available to the Patreons at that lower $5 per month tier. And so you can see here that I've brought down their North American towables by 45% in 2023. The motorized is actually strong, so I think that it might actually increase by 15% in 2023. And you can see that I'm putting my notes here because I noticed that you guys don't actually are able to see the notes when I put them in the cell. So I've just been putting them in this notes column down. So you can see Q1 sales for North American totals declined by 40%. With North American motorized, it actually increased by 21.5%. I think that slows a little bit. So we'll see how this plays out. I'll adjust this every quarter as time goes on. And so with Europe, you know, the sales declined by 20.3%. So I became a little bit more pessimistic here. I'm not growing out that other segment at all. So overall, total North America is, or actually this should be total, so I'll change that before I put the video up, but total is growing at or declining by 25%, and then it's just growing out at 5% thereafter. So I'm not giving them that huge sales growth number. So you can see they want to be at 20 billion. I'm getting them to 14.5 or 14.7 billion. And so, you know, you guys might be a little bit more optimistic than I am, but I want you guys to let me know. Now, in terms of gross profit, once again, this is just total, not total North America, because that's total North America. So I'll switch that before you guys get access to the model. But notice that I am not increasing the gross profit margins on a total basis to 17%. I'm keeping it closer to 16%. And that's just how I'm going to forecast this company out. But once again, you guys might believe that the gross profit margin should be higher. And I want you to let me know why you think that. Now, in their Investor Day presentation, they spoke a lot about how they're trying to get the European gross profit margins up considerably, and they laid out a playbook on how to get there. I give them a little bit on that, but I'm not giving them enough to get the total gross profit margins up to 17%. But once again, I want to know from you guys what you think about this analysis and this forecast. Now, ultimately, I think the company's shares are attractive at the current level. However, to see the valuation and exactly how I build it up, jump into the model, which you can get access to at this lower tier. And by the way, guys, thank you so much for all 200 of you, or I guess more than 200 of you at this point, who've decided to join us on the Patreon. And if you want to join us for an epic live presentation, you can join us at this higher tier, which I believe is the best value on YouTube. Now, some of you guys might be wondering, how exactly am I able to research these companies in as much depth as I do? And I would actually tell you guys that this didn't take more than a couple of hours of doing the research. And so how did I do it that fast? Well, I actually break down to you guys how I research companies so fast in this video right here.